Hey everyone, welcome to Property Finance with Lee. Today I've got Andres with me from Xpand Property. We're going to be going over the RBA rate decision, what it means for the market, what the banks are doing, and general things that are happening at the moment. Andres, welcome to the show.
Hi Lee, thanks for having me on again. Really a pleasure just to be on the show again. And let's talk some business.
Let's talk about it. So, yesterday, the RBA decides to
Yep,
hold rates. What are your thoughts?
mate. I reckon they're going to be holding rates until after this tax cut comes into all the, in July, which is next month. And I reckon we'll start seeing some movement probably in the early of next year, or maybe even quarter 4 of this year.
Yeah.
They're going to be backpedaling. They've locked themselves into a scenario where they can't get out, and the only way for them is to bring their rates back down. The economy is slowing down. As you can see, finances are not as prevalent as they used to be. You got a lot less people applying for loans. People aren't spending money, so they've got to do something to counteract that. They've got to get people spending money. They've got to pump money into infrastructure and projects and actually get the economy started up again. So I honestly think we're going to be seeing a bit of a turn come at the end of the year and then definitely into the next year.
Yeah. So pretty much mirrors what their statement was saying. So I went over their statement, that they released yesterday about, how they see things and whatnot. So maybe we'll just go over some of the key takeaways for the audience.
Yep.
Essentially, look, as everyone knows, they're trying to get inflation between the 2 to 3% range. They believe this is going to happen towards the end of next year or the following year, the first half of the following year. At the moment, it's sitting at 3.6%. Some of the things they said regarding job numbers. So they seem to believe that job demand is slowing down. They believe unemployment is rising. They believe that production has slowed down. So, although we're in a tight labor market and pays are higher than they've ever been, they believe production is going backwards, which was interesting. In
Yep.
terms of future outlook, they came out and said indicators suggest weak economic activity. They cited slow GDP growth, rising unemployment, and slower wages growth. In terms of consumption and the household impact, real disposable incomes are stabilizing and are expecting to grow, aided by lower inflation and tax cuts. So, what they're basically saying there is people are going to be left with more in their pockets thanks to the tax cuts and also thanks to prices not increasing as much. Obviously, their priority is returning inflation back to target. Like we said, it's between that 2 to 3% range. The board emphasized the importance of medium-term inflation expectations aligning with the target. So basically, what that tells me is if in the medium term they think CPI will increase, I think they'll be aggressive with their rate decisions, meaning that they might raise them. But I don't think there's enough happening at the moment to warrant that, which is probably why they kept them stable. So, with all that said, interest rates going sideways, Andres. Job unemployment, still great, but rising a little bit. People's disposable incomes increasing, being left with more. What do you think? Do you have you noticed anything happening in terms of with the property numbers that you see, auction clearance rates, property price increases? Have you how have you seen things go?
Look, there's been very little movement in property sales. Let's say the increase of sales over the month of last month. I think the biggest growth has been, which we all expect, is in Perth, as well as Queensland's been, not far behind Perth. Everywhere else has been pretty much stagnant. I don't. Local developers over here in and around Yass, New South Wales. I actually spoke to a bloke this morning that is a property developer. He's got two developments happening, or he was about to start. One's of about a 47 lot development. The other one was 70 odd lot development. And he told me he's actually going to put that on ice for 12 months, purely because there's no movement in sales. The sales have actually dropped in our area. So by about $100,000 from where we were last year. So, it's for him to sell lots at $320,000 a lot when they were at $400,000 this time last year. it doesn't make financial sense to expend that kind of money on the civil
Yeah.
works. So he's put it on ice and he's looking for something else to do. That's just one person. Up in Queensland, you still got the issue with, there's a housing issue. The rents are still high. Property values are still, climbing, but very slowly. I think it's 1.5%. Was it 2.5%, I think, and everywhere else is about one, 0.5 or 0.6. So it's very small growth overall in the country, except for the two markets that has predominantly moved in the last few months. I do think Perth is still gonna be an uptrend overall. The one that we haven't seen move yet, and that's been for quite some time, is the Victorian market. But with all the tax that the government's been putting on to investors and property owners, I don't expect that market to
Oh,
climb
people
significantly.
are hating that market at the moment. I've got one
A
client.
lot of yeah, a lot of investors are selling up.
Yep.
So you've got an influx of properties coming onto the market, which isn't good overall. Look, there's still a lot of areas within Australia that's has got really good growth potential. We that we've got our inside in-house data that gets updated monthly that give us all those niche markets and those hotspots that we can actually find really good value for clients. And that's been fundamental to our business
Yeah. So
overall.
you're still able to obviously find things that are prime for investment. But I guess the takeaway is that it's the whole market isn't moving how it was towards the end of last year.
100%.
It
It
slowed
has
down.
stagnated. Yeah. So look, just like the crypto market, crypto market's gone into a slump. It's gone all red. Currently, the property market in Australia is just going
Yeah.
sideways. So it's what they would call an accumulation phase. So the longer the accumulation phase, the bigger the next up or the leg down is going to
The
be.
interesting thing is as
Um,
well that the interest rates have acted the same as well. They've mostly gone sideways. With the fixed rates, some banks have raised their fixed rates, expecting interest rates at some point will increase over the medium 2 to 3 year term because
that's
of the
right.
CPI scare. But overall, it's very marginally. I would say that if anything, they've gone sideways too. So you would think with stable rates, you would have thought maybe a bit of growth. I think everyone was expecting a bit of growth in the first half of this year, but
No,
it's not to say there hasn't been, but it's definitely not at the rate of the end of last year that I think people were
no.
expecting
Look,
to
and I
carry
and
on.
I think what's happening, and obviously COVID, we call it the COVID tax came in.
Yeah.
All properties countrywide really jumped up, right? So you can't have a massive leg up without it coming down slightly and then going sideways for a period of time before the next phase kicks in. So this is where we're at the moment. We're going sideways before the next phase steps in. With cash being suppressed, I think we're going to see, with these tax cuts coming in, and when the interest rates do fall down slightly, you're going to have a lot more confidence coming into the market, and I do believe that property values are going to shoot up again.
So, as an investor, Andres, how are you changing your strategy? Because I know we talked about it previously in our previous podcast, which was now some time ago. You were looking at high rental yielding properties in some not so well known areas. I think we said back then they were mining adjacent towns. They weren't just mining towns. They were let's call them industrial towns. I don't want to give too much away without people using your service, but
That's it.
how has your strategy now, given obviously what's going on in the first half of this year, how has it changed? What are you looking for your clients? Are you looking at things that have the potential for capital growth? Are you looking at things? Are you building more rental type portfolios? How have you changed things, or have you not changed?
Look, it really depends on where the clients are at, because each case is different. But overall, I would say there's a trend towards going more of a balanced portfolio. We've got cash flow coming in, but also the capital growth acts, because you don't want to lose out on when the market does shift. So I sourced a property that was high in cash flow, but also in an area that's got a lot of investment going on, to counteract that negative. So I'm actually positive at the moment. I'm actually going to be selling one of my units up in Queensland because it's done what it's needed to do. We've pulled equity out of it twice before. We've still got really good equity sitting there, so we're going to pull that out and we're going to buy a freestanding house if I can. So that's the kind of thing that I'm looking at doing myself. Again, today we had a client phone in, brand new to property investment. He's got a little bit of a deposit saved up. He's earning really, really well. We're looking at over 140K a year. He's earning. He's got no dependents. He doesn't own a property, so he's renting. Um, so for him, it would be great to get a fund like a foundation property where you can have more of a balanced portfolio with the cash flow being there as well as the capital growth. So you can actually use that as a stepping stone to get into your next property and then the next one up above from that. I always tell my clients, look, try and find at least for your first 2 or 3 properties, get something that's going to give you cash flow, but also giving you that capital growth, because the capital growth in 3 or 4 years time is going to allow you to multiply your property portfolio a lot quicker than if you were just buying cash flow. Cash flow is great. You need the cash flow, but the capital growth is where you actually make the magic happen.
So
So
regardless of
yeah,
what's happening in
that's
the market, you're still insisting people look at probably their first 2, 3 properties, balanced properties, a bit of capital growth, a good yield, but not
yes.
not the extremes of either.
No, that's right, and it really depends on what their budget is.
Yeah.
But also, we sit down with them, we go over a strategy, and we tailor something specific to them. It's got to fit with their lifestyle and their budget, because it doesn't help you. You look for a property for a client of yours, and it might be costing them $300 a month, but they don't even have $200 to spare in a month. So you really have to be strategic about where the properties you put forward to your clients, as well as the areas.
Is there a specific area
Um,
that's caught your interest? We'll give them something. Is there one area that you found that you go, geez, there's some potential here. It's undervalued.
Look, I think there's a lot of potential, and I know this is going to be
Controversial.
very, yeah. I think Victoria's got a lot of
It's very
potential.
hated at the moment.
It's very hard at the moment, but if you're one of those early investors and you get in early while the pricing is down and everyone's hating it, you pick up a few bargains along the way. In 2 or 3 years' time, it starts picking up again, and you benefit from it.
Yeah.
You've got to think a bit more long term with some of your investments, and you've also got to have a bit of a mixed bag as well. Have some in the city center, have some regional, have some in growth spots.
You know what the problem is, Andre? Is I've got a client at the moment, and this client has lived in Victoria his whole life. Worked his backside off, managed to purchase 12, 13 investment properties. He's just had a guffle because of the proposed laws. He's like,
Yeah.
I haven't asked anything from the government. My whole life basically. All I was trying to do was fund
Yes.
my retirement my whole life, and they're coming after me because I haven't been a burden on a thing. So he's taken these 12 properties. He's so fed up with Victoria, this bloke. He's taken these 12 properties.
He's
He's given them to one agent. He said this was a while ago now, but he take them, sell them,
yeah.
and he's up here now buying industrial property. Up in Queensland. He's just had a guffle. The truth of the matter is that it's still got good fundamentals. It's the second largest city right now. You've got a lot of industry there. It's serious. It's a serious place. So
It's still got a lot of potential for it. And look, when you looking at the risk profile of Melbourne, it's very low. I know a lot of people have moved out of the states and moved up into Queensland. Queensland's been the big gainer when it's come to migration within Australia. Overall, the whole of Australia is experiencing a massive wave of immigration. So, those people have to go somewhere, and, it's only a matter of time before markets shift again because of the supply and demand. We've seen it up in Queensland, we've seen it in regional areas, we've seen it in Sydney, where people stand in queue just to get into a rental property.
you know what it is? Queensland and Perth and WA, they've had a lot of interstate migration. There's a lot of people from the Victorias and New South Wales leaving to those two states. But when you're an immigrant, a new immigrant to the country, your number one thing
You
is
don't know
you don't
anything.
know anything. Your number one thing is finding work, and you're going to go to either Sydney or Melbourne for that work. And
Yep.
it's always going to be the case. Those places are always going to get the bulk of the migration. They're
I
economic
think
powerhouses, right? I mean, if those two cities aren't
that's
doing
right.
good, the whole of Australia's stuffed.
Exactly. So look, the other side of the coin that I actually had a really decent chat about today is the construction side. So not only do you have massive immigration happening, you've got a lack of land being released. You've got a lack of zoning being changed within city centres because governments aren't doing that. The construction companies, as that a lot of them have folded in the last financial year. I think we're looking at over 3,000 companies have folded in the last 12 months,
It's a
which
lot.
is absolutely massive. They are now considering changing where in the commercial sector, when you're constructing a building, you've got to build it to a certain Australian standard, so which is the 2022. They're now considering bringing that model into the residential sector, which means it's just more red tape they're adding to it. So, once that happens, then material costs are going to increase because they've got to build to a certain standard. Your construction costs increase. So all of a sudden, property prices to construct a new property is going to increase. You've already got an issue with, there's massive demand, there's no supply. Add a bit more fuel to the fire, it's going to cost you more to build a
Yeah.
place. Building a new property is not going to be as profitable, but at the same time, it's got a flip side to that. If that happens, property prices are going to increase as well because it's going to cost you more to build a property. And it pulls the existing property values up with it. So, it does have a negative effect on what they're trying to achieve by, you know, bringing the housing market prices, stabilizing it a bit better. It's not going to do that.
Andrews, I've noticed, I'm on the Gold Coast at least. I can only speak for the Gold Coast. I've noticed that people are not putting as much value on the location these days. They're putting far
That's right.
more importance on the actual structure. So I'm seeing properties in areas that are, were once regarded lower income areas, sell for
Yep.
in the millions here simply because of the structure that's on that land. It's very interesting. I think
It's
there's a shift because construction costs have become so expensive. Because people think, this is the house I
100%.
need. I need that 4 bedroom house with the two living spaces. I've noticed that the margins between what were regarded the good areas and what were regarded sort of the average areas on the Gold Coast, at least. I've noticed those margins getting tighter. It's definitely not as much of a jump. I genuinely think it's just construction costs, at least on the Gold Coast. They've
Yep.
also, the other thing is up here, they've changed a lot of the flood plan leveling. So what's happening is, and
we we actually spoke about that
we,
today as
oh
well.
right, there you go. So I was recently been looking for a place, and the area I was looking in. I was thinking at one stage to go and buy a knockdown, knock it down, and build something brand new.
Yep.
And to be honest, there wasn't much of a difference if it was just a matter of the building cost and buying something that I can knock down, and I'd get a better quality home for similar money type of thing. Um,
Yep.
but what's happening now on the Gold Coast is, at least in most of the sort of central to southern areas, you now need to, because of the flood levels, you've now got to backfill your land and build your pad on top of that. So they wanted to they want your actual land
That
thing.
one.
And I got a quote for a standard block in Broadbeach Waters. What the cost of this would be: 550 square meter block. If you're building on say half that land as a footprint, it's around 200, 250 grand just to increase the level of the land before you start building.
100%.
With going back to what you were saying about regulations and increasing the standards, now increasing the flood levels, so now you've got to put this pad in. These sorts of things, they all
Exactly.
add cost. And someone who was interested in building, in myself, I was interested in building. I say, no,
Yep.
I'm not doing it. Now I'm going to find something that's almost there, and I might pay for a renovation. I'm not building now.
Yeah. Look, I think the government, obviously they try to do their best, but I think what they're doing is having a much more negative effect on the whole market. And one study that has been done in New Zealand is what they did was the inner city suburbs, they actually allowed for rezoning of those properties to have in suburbs where you've got single level buildings, all of a sudden you can replace that with a 2 or 3 story
Yeah.
building, allowing more densely population into an area. And what it actually had two really good benefits. It it allowed for people to be closer to the city. It allowed for cheaper building costs when obviously comparing buying 3 separate lots and then developing it to having one single lot and then developing it. So it actually it actually filled the market gap with not having enough housing for the population. So that's something I really strongly believe that they should be looking at doing in Australia, to try and, at least short term, allow developers to step in, take the lead, and develop those properties, and bring more properties to the market. Issues
They're
and
not
all that.
changing the town plan quick enough. That's
No.
the issue. It's once every 10 years type of thing. But we've got the issues today. We don't have them in 10 years time. In 10 years time, we're going to have
Well,
bigger
the thing
issues.
is, they should be building, from the stats that I've seen, at least 240,000 dwellings a year to keep up with the population that we currently got. They're only building 150,000.
Yeah,
They short about 90,000 trades alone. So for them to get on top of where they need to be, there's going to be a major shift to meet those demands. It's not an overnight fix. So I strongly believe that property values are just going to keep increasing for at least the next 5 to 10 years. When you've got a strong demand and there's no supply, it has the effect of prices going up. So I keep telling my clients, like, if you've got the capacity to get in right now, you know, with everything that's going on, the interest rates are high, and everyone's worried about where the next meal is going to come from. If you've got the capacity to buy or get at least into an investment property, now is the ideal market, because it's actually, in my opinion, it's a buyer's market. It's when you're going to see the biggest gains, because no one else is really buying. Everyone's too scared. If you can make it work and you can actually sacrifice, that money to get into investment and buy in an area that is going to give you the capital growth long term, then you really should be doing that. Just sitting on your money or just having it sit in a bank is not going to help you.
yeah.
So definitely something to consider if you are, even just thinking about it.
And guys, look, me and Andres have helped multiple people, get into the property market. And one example will be a young couple in your neck of the woods, Andres. Very small deposit, 30 grand. We were able to help purchase their first home, fund and purchase their first home without LMI on a very, very good rate, very, very little fees. They only had a 5%
Yeah.
deposit, guys. So, it,
One of those stories that you hear about happened 10 years ago, 20 years ago.
yeah,
It's still happening. So if people, like the most people that I speak to, they all have a very similar story of it's only for the rich. I can't afford to buy an investment, or I'm not in a position to get a loan. And the thing is, a lot of those people haven't even taken the first step just to go to a broker and actually see what they can borrow.
exactly. Doesn't cost them
And
anything. Guys, my service is free.
it doesn't
I'm,
cost them
I'm not
anything.
charging you. Pick up the phone, give me a
Exactly.
call, say, Lee, can you please work out my borrowing capacity? And what?
That's all it takes to at least get the ball rolling.
Yeah,
And that's where Xpand come in after
that's
that.
right.
Obviously we come in, we find you would find your property or an investment, or even if it's your family home you're looking for, we find that property for you at the specifics that you want, and we make it work.
And believe me, some of the properties that Andres has shown clients that we've worked on together, I've said to him, mate, why didn't you show me that property? Some of the properties are just ridiculous. You
Look,
you would not believe that
uh,
they actually exist. At the rentals that they're receiving, the capital growth areas they're in, it you the fee is such a Aldridge's fee is such a small price to pay for the leg up you're going to get as a first
look,
investment. It's
and and look, we always work for our clients to try and get that property below market value. So our fee kind of gets chewed up in the savings we make. Look, there you're talking about property deals, so let's go into that. So,
yes.
you know, I've in the last month I've had a couple of single bedroom units down in Melbourne, $99,000 a pop.
How much?
You can't even bill $99,000, under $100,000 each. They're renting at $230 a week, and
I'd struggle to find them a lender that's
and
willing to
this
lend them that little amount. That's
you
crazy.
can't even build a you can't even build a granny flat for that money.
Wow.
So, I've had quotes for granny flats, a tiny, 60 square meter at $80,000 in your backyard. This is a unit, and yes, it is in a slightly larger complex, but it's in a really good location. A stone throw from Melbourne, and it's renting at $230 a week, and the second one is renting at $250 a week.
So let's
So,
let's do some math. Let's do some math real quick while we let me just because I think this is unbelievable. So let's imagine they've got a 20% 20% deposit. I'm sure 20 grand. Let's imagine
$20,000.
they got that. Okay. So we work with an $80,000 loan. $80,000 loan. Say at 6 point. Let's let's err on the side of caution. Let's say 6.3. Loan term 30 years. So we've got a monthly repayment of $495. And
Right.
and,
And
and,
now
and,
go
and how much
200.
how much did you say they were renting for a week?
So let's go up to the lower end, $230 a
So
week.
230 a week. So they're collecting nine
Almost a
twenty.
thousand
Nine
dollars.
920?
Almost $1,000 a month.
Yeah, 920. They're collecting 920 a month. Their repayments we said 95. So they're basically ahead $425 a month. They're actually making money,
That's right.
paying off principal and interest.
On 20%.
That is nuts. Even even
Yeah.
if
So that's
even if
one.
you could technically get
So,
them a loan for the whole amount, let's imagine you could, they'd still be
exactly.
ahead
And
even without the 20.
exa-
Like even if they were paying.
look, you just have to hold that property for 5 years and gain the capital growth component alone, which was sitting around 15 to 18% per annum.
It's crazy. You can't
Yeah,
lose.
so you can't
You-
lose. It's costing you bugger all to buy. It's costing you nothing to hold.
if you could buy
So
if you could buy, say, for argument's sake, because you're making 500 a month. If you could buy six of these, you're laughing.
yeah, yeah. Look, I wouldn't do that for a client because there's too many eggs in one basket.
Sure,
But
but
essentially, yes,
you
you're
could make
laughing.
3 grand. You could make 3 grand a month technically, doing nothing, just holding the ticket.
Exactly. So that was two off-market properties that I've got, and I do believe there might be one of them still available. I've just checked
I
with the
actually have
agent.
a I have a I have a client that might take one of them in cash. So just
Okay,
give me
we'll
give
talk.
me
We'll
some
talk later.
info.
And there was another property that two other properties that I had off market, both in Queensland in Deception Bay. I won't give more info than
Sure.
that, but one is a two-beddy study, two-bathroom,
Okay.
selling at 425. The other one is a three-beddy, two-bath for 465. And basically, at the end of the year, you won't find anything for under 500,000 in that complex. So you hold it for a few months, and you've made equity.
How much was
And
the
it's
renting out
they're
for?
both renting. Look, the rent on a two bedroom is around the 450, and I think the one at 465 is around the 485, 490. So that's 6%
Yeah.
roughly.
So with those properties, just so our viewers can understand, the rental the rental will cover the actual repayments on that property, less 300. So essentially, you would have to top it up 300 to pay both the principal and interest component of that loan.
That's correct. But then your capital gains
That's
component
right.
kicks in,
Which is where you're going
and
to make
and
your thing.
obviously and then your tax as well. So you've got to look at
Yep.
depreciation,
Speak to your
and it
accountants.
is in a growth corridor.
Speak to your
Yeah.
accountants. We're not accountants. This is a tax advice.
So
Disclaimer, disclaimer.
look, that's a couple of properties. We've got another one that's sitting at 399,000. That's leasing at, I believe it's $1,400 a week.
Wow.
So that's a cash flow property, and they've got corporate tenants. So that's a contract for 2 years
Wow.
that you've got people in there. There was another one for just over the 400. I think it was 429,000, sitting roughly about the same rental as that one. We've got standalone loan houses, ranging anything from 7 to 10% in rental yield. And these properties are all looking at a minimum of 12% per annum capital growth.
Yep.
So it's look, there's properties, there's deals out there,
But you're not going to find them
and if you
unless you
don't,
pick up the phone.
the the problem is, your average person won't have any idea of where to look for
No.
these things. We've got the data. It gets updated monthly. We've got access to over 5,000 suburbs nationally. We really have a really good advantage there, and we can set those parameters anywhere we like. We can look for capital growth. We can look for cash flow. We can look for a combination, low risk, high risk. So it really also depends on your risk appetite. But if you have got very specifics about being close to schools, infrastructure, all those kind of things, we can plug that into our data, and it gives us a heat map of areas to look at around the country. And that's when once we've identified an area, that's when we step in and we actually do the groundwork, and we do proper research of the area and find properties that and we make sure there's no flood zones, bushfire zones, all the nasties you don't want to find.
Yep.
Insurances play a big role. I've got a property that's sitting in a typhoon area. Yes, it's giving me good returns, but at the same time, my insurance has gone through the roof. I'm paying over $300 a month in just insurance. But you've got to weigh those things up, and that's where when we put something forward to a client, we give them an entire spreadsheet with all the figures, so they can see clearly exactly what their expenses will be in a month, what they will benefit at the end of the day, and it gets pulled into a summary sheet on the front page that actually allows them to see the entire portfolio of properties on one single page, and they can watch that grow. And it also gives you the advantage of seeing what that property will do over the next 10 years based on the growth component, of 10, 12, 15% per annum.
If you're sitting there, you're not sure if you've got a big enough deposit. You've saved some money. You're not sure if you've got a big enough deposit. You're not sure if you can purchase an investment property. Pick up the phone. Speak to a professional. Speak to myself. A mortgage broker. I can at least give you your borrowing capacity, let you know what you can purchase. Speak to Andres. He can let you know what's out there, what he might be able to source for you, and let us help you get into the market. We've helped other people, and I think people, Andres, they're a bit cagey. I think they feel like they're not in the position to. They don't actually understand how much power they have. They think they.
Yeah.
But look, we've had some clients, without getting into specifics, that you would think couldn't borrow any money. You would think probably couldn't purchase. In fact, tried to enter the market for decades, and we've given these people a way forward. So
That's it.
you know,
I mean, one of them only had, I think it was less than $15,000 deposit. And we were able to find him a unit, three different properties in two different locations, and they were all cash flow positive from day one. So I think the message for people should really be that if you're uncertain, at least make the phone call and have a chat.
absolutely,
It's not gonna it's not gonna hurt you in any way. I think both myself and Lee, our ethos is really to try and help people get into the market, and we want to help people build their portfolios. So that's the whole reason why I started Xpand. Is we've had to learn the hard way, and I just love helping people, especially newbies, get into the market, and I love helping people that already have a portfolio going. Like one of my clients, she's already got three properties. Really bad experience with all three of them. She's made the wrong decision buying off the planned properties from property developers, and they haven't performed at all over a long period of time. So you have to have a strategy in place.
Guys, pick up the phone, give us a call. We're here to help you out. I think is the idea. But yeah, to our viewers out there, me and Andres, we're going to try to do this once a month. Okay, that's been the plan. We've had a few technical difficulties in the past, and work's gotten in the way, but we're going to try to do this once a month. If you guys have a scenario for us to look over, and you would like us to maybe even workshop the deal on our podcast, we're happy to do this. So please engage with the podcast. Put a comment down below. Send us an email. We'll be happy to go over that. Thanks for tuning in today. If you have any questions, please pop them down the bottom. Andres, thanks for coming onto the show. I'm going to post all your details down the bottom if any of our viewers want to get in contact. Hopefully we can do this again next month.
Great. Thanks, Lee. Thanks for the invite, and look forward to speaking to you next month again.
Sounds good. Have a good one, everyone. Thank you very much for watching.